Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Logistics firm Ecom Express files draft papers with SEBI for an initial public issue of shares worth nearly 2,600 crore rupees. The offer will comprise fresh shares worth 1,284 crore rupees and another 1,315 crore rupees in an offer for sale by existing investors. Attero Energy turns unicorn after having secured $71 million in a new funding round led by its existing investor, the National Investment and Infrastructure Fund, which takes its valuation to $1.3 billion. EdTech firm PhysicsWallah is in talks to raise fresh round of funding, sources confirmed to CNBC-TV18. A report suggested that Lightspeed India is looking to lead a $150 million round in the EdTech unicorn, but the VC called it a speculation. Ola Electric reaches a valuation of $6.99 billion after launching a new line of motorcycles. It also bets on lowering costs by using its own batteries. Separately, it reports a net loss of 347 crore rupees for the first quarter, up from 267 crore rupees on a yearly basis. Oyo reports its first ever net profit at 229 crore rupees for FY24. The IPO-bound unicorn's net profit comes on the back of 8 consecutive quarters of positive adjusted EBITDA, which grew by 215% to reach close to 877 crores in FY24. Intercity bus startup Fresh Bus secures 87.5 crore rupees in its Series A round, led by transportation-focused VC fund Marniv Shell Ventures, Ulterior Capital, and existing investor Riverwalk Holdings also participated. The company will use funds to expand route network with 15 additional routes and launch 150 electric buses. Well, those were the headlines that we are tracking for you from the startup world. To this top story today, newly listed Ola Electric took the spotlight as it forayed into the electric motorcycle segment with the launch of the Roadster series motorcycles. Ola Electric's bike portfolio under this range comprises of 3 models with prices starting from 75,000. My colleague Ritu Singh caught up with founder Bhavish Agarwal to know about the company's revenue outlook, the motorcycle launch and more. Here's a slice of that conversation.
Now as the environment is changing, what can you guide the street in terms of what FY25 will look like in terms of your sales trajectory and your revenues?
The key highlight of this earnings was that our automotive segment, and this is the first time we were publishing earnings, and we actually split our earnings into 2 segments, the auto segment and the cell segment, given the nature of the businesses and the stage of the businesses. So the key highlight is that the automotive segment is actually almost EBITDA break-even. You know, we have come from last quarter of almost negative 8% EBITDA to negative 2% EBITDA, about a 30-odd crore EBITDA. And there was a one-time reversal of PLI. If that was not there, you can assume it was an EBITDA neutral quarter for us on the automotive segment. So actually, that's a very important highlight that I want to share with all your viewers, that there were a lot of people in the industry who used to believe, can EVs make profits? Right? And we have shown that actually we're already there. Despite a reducing FAME subsidy curve, despite what you mentioned, our tactical discounts here and there, which we keep doing and we'll always do. But EVs are a very solid business model. EVs are the future, not just from the consumer lens, but also from the balance sheet, as our financials this quarter tell.
Well, operational, you're still cash, when you talk about operational cash flows, you're still in the negative. The loss has widened sequentially. It has widened over the last year. So what can you guide the street about, achieving this break even? When will you get to that stage?
See, the reason, that's a very fair question, Ritu, and that's why we have shown 2 different segments. Because on one side, automotive for us is growing well. And we are seeing increasingly good operating leverage. Because we've already invested into the factories. We're sitting in the factory. So we've already invested, and as we are increasing volumes, the fixed costs are not going up with it. So, and that's why our EBITDA is almost break-even in this quarter in the automotive segment. For automotive, you saw us announce today the new motorbikes.
We'll get to that.
We'll get to that. But from a financial perspective, the motorbikes are built on the same platform, same factory, all fungible capital expense. So it's not going to increase the cost structure in any meaningful way, but volumes will go up further. Scooters are continuing to grow, and motorbikes will add on top of the scooters. So this increasing volume over the course of this year with new products, as well as with penetration growth, is going to get more and more operating leverage for the automotive segment. So that's the key highlight on the automotive segment, growth and profitability.
Yeah.
On cell, so if you look at the console loss that you were mentioning, the cell segment is an investment phase. We are the largest recipient of the government PLI for lithium cell manufacturing. And the first phase, which is 1.5 gigawatt hour, is already commissioned. Next year we'll complete 5 and then go to 20 in steps. So there will be a period of improving profitability over there, but right now we're in investment phase.
Well, let's talk about the bike that you just launched. Everybody seems most excited about that. Starting at $79.99 all the way up to 2.5 lakhs, as your introductory prices. Just give us a brief sense of when deliveries are starting in the first year of manufacturing. What kind of units are you looking to produce? What are the aspirations there?
What we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees. So the Roadster Pro, the Roadster and the Roadster X. Now, the important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already. Right? Because the entire platform is common. And the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point. And then we already have capacity in our factory. We have an installed capacity of about 1 million units a year. Our scooter volumes are roughly 500K a year right now, growing. And we have headroom to grow. And the factory capacity is all fungible across scooters or bikes. Because the platform is the same. So we are going to grow in the existing capacity, and then when we cross 1 million combined capacity, we'll install more in the factory.
Because you'd announced these last year and now you're officially launching them. You must have a sense of the demand. I'm just trying to understand, given that you say it's 2/3 of the overall two-wheeler business, will it be the same when it comes to revenue for you?
See, again, we will have to see how the revenue and the scale happens, but I feel very confident that there is going to be a stronger rate of growth in motorbikes. Because of a few things. Firstly, the market is already educated on EVs now. 3 years ago, nobody knew EVs. We had to educate the scooter customer about what an EV is. We had to set up the charging network. We had to set up the retail distribution network. We had to set up a brand. We had to do a service network, all of these things.
Well, there's lots to talk about, but let me quickly touch upon what you announced with respect to Kruthrim. And, you're talking about making chips in India. The first chip, Bodhi 1, by 2026. And one of the more advanced ones by 2028. What are your aspirations then, and what kind of investments are you looking to make? Because this is a completely new thing you're talking about building from scratch.
So building the silicon chip in India is absolutely critical. Bodhi 1 will be delivered in 2026. And our ambitions are to have Indian compute, Indian developers building on an Indian chip in an Indian cloud on Indian AI. Right? And that's what Kruthrim is looking to do. It will take investments. We are not announcing any investments today or any scale of investments. But whatever it takes, we will do.
All right. Let me quickly get to, the commerce, the consumer side of the business. And you've announced these portable, fully automatic dark stores. Just give our viewers a sense of what this is going to be. Are you going to compete with the likes of, these 10-minute e-commerce companies? Or are you only going to be, working through the ONDC platform? What are the plans here?
Commerce has to be open in India, Ritu. The future of all digital tech in India is open and DPI, digital public infrastructure. The walled gardens of e-commerce will be broken by ONDC. We are partnering very deeply with ONDC. Koshi was here today. You heard him speak so passionately about his vision for ONDC and the Ola partnership. And these dark stores, these automated, fully robotic dark stores are going to be used by all participants on the ONDC network. It could be any buyer app. It could be any of these quick commerce companies if they want to be on the network. I don't think they're on the network today. They might see the network as a competition. But if they want to be on the network, they can use our logistics and supply chain. It could be a kirana wala. Imagine a kirana wala who has limited shelf space. Now 10 minutes away, he can have an automated go down where he can basically then expand his catalog to infinite numbers because everything is stored 10 minutes away. Right? So kirana wala benefits from it. Modern trade benefits from it. D2C brands benefit from it. D2C brands today spend 20-30% commission on platforms like e-commerce or Amazon or whoever to distribute their products to the consumer. With this vision, they can sell directly to the consumer at much lower cost. All of this is enabled by our technology on ONDC.
Well, Ola Electric forays into e-bikes with the launch of the Roadster series. Moving on, cross-border payments platform for enterprises, MSMEs and freelancers, Skydo has secured $5 million in a pre-Series A funding round led by existing investor Elevation Capital. The funds will be used to scale operations and strengthen the platform's risk monitoring and compliance processes. To talk to us about the road ahead, joining me now is its co-founder, Movin Jain. Movin, welcome to Startup Street. Cross-border payment solutions face two major challenges: high transaction costs and long settlement durations. In fact, a study done by Capital Economics says that in 2020 alone, Indian exporters lost over $3 billion to foreign exchange fees. So, Movin, tell us, how are you at Skydo addressing this issue?
Hi, Shruti. Thank you for having me. Indeed, it's a pretty big problem for Indian export businesses to be paying such high fees and losing a significant percentage of their profit margins in payment costs. So that is what we are trying to solve. And how we are solving for it is from a TAT or a turnaround time perspective, we've automated most of the process of moving money from a foreign country into India. So it's as less human dependent as possible. And that's what's creating this improvement in turnaround time and helping these businesses receive money faster. From a cost perspective, we've made the cost completely transparent. Instead of making the FX rates opaque, we've made it completely transparent and easy for people to understand how much they are paying so that they can take an informed decision about which payment service to use. And that's helping these companies control their costs.
All right. So you've automated the processes and made them completely transparent. But, you also claim that Skydo can save up to 80% of forex transaction costs when dealing with international clients. In fact, you plan to help Indian businesses save $1 billion in forex fees over the next 3 years. How are you going to do that? And why can't banks and other forex platforms replicate your model?
Yeah, firstly, how we are going to do that, I think, is pretty simple. We have understood one particular pain point of these export businesses. India's exports are growing. The government wants it to grow. And we have several sectors in which we are experiencing, double-digit growth rates. So as we keep building a better and better product and keep improving our cost and turnaround time offering, I think we will continue growing, and we've got very solid growth plans, particularly with this investment that gives us more fuel to put into our growth. I think from a banks and other players' perspective, I think there are quite a few banks and other forex players that are actually building something similar or trying to solve the same problem. So I think we welcome competition, and we think that quite a few players will actually succeed. It's not a winner-takes-all market, and we actually need competition to be able to inform the customer that this can be done using technology.
Okay.
So I think competition is welcome.
All right. Let's talk about the fundraise now. You plan to use the funds for global expansion, acquire payments licenses across geographies. If you could elaborate on these plans, Movin, and what are the key markets you're looking at?
Definitely. I think we think of ourselves as an India-first company, and hence we will first look at markets that are important from an Indian exports point of view, which is the US by a huge margin, followed by UK, Europe, Canada, Australia, Singapore. So these are some of the key countries in which we are thinking of expansion. Accordingly, in the same countries, we're also thinking of being regulated and setting up offices so that we could be a regulated company in those countries and move money for Indian exporters seamlessly.
Okay. You currently process payments for over 6,000 Indian SMB exporters and have processed payments worth over $100 million since inception. What kind of revenues are you seeing? Are you making money per transaction? And what is the road to profitability looking like?
Yes, we do make money per transaction. That's one of the positive things about this business, that it's a high gross margin business. Take rates do tend to be low in payments. So our take rate is below 1%, and with a $100 million total payments processed, we can approximate the revenue. But I think it's still pretty small for us to think that we've succeeded. I think there's a long way to go. I think over time, as we keep growing, our margins will also keep improving. So the road to profitability is not going to be a very difficult one. We expect that if we continue at the current growth rate, then in the next 1.5 to 2 years, we will be profitable. That's not the key agenda right now. I think we see a lot of growth ahead of us.
Okay. You're also aiming to process payments of over $750 million by 2025. What makes you bullish, Movin, and where do you think the next big opportunity lies for you?
I think what makes us bullish is just the last couple of years of success, and we've more than 10x our volumes in the last 1 year. So we feel that another 5 to 6x growth in the next 1 year is not something that's extraordinary.
Okay.
I think we do see a lot of opportunity in growing services exports, growing e-commerce exports, and also the government's focus in incentivizing and supporting exporters.
All right. One final question, if you could quickly answer that. You operate under the RBI's online payment gateway service provider framework. Skydo has also applied for the cross-border payment aggregator license from the RBI. What is the update there?
So, as you said, we currently operate under the previous framework. Now, it's been replaced by the new cross-border payment aggregator framework. The deadline for people like us, companies like us, to apply was April. We've applied well in time, and we are one of the companies that's now anxiously awaiting RBI's decision on that. So we've had a few conversations with the regulator about it, but it's anybody's guess when the final decision will be made. Fingers crossed.
All right. With that, it's time for me to wrap up our conversation. Movin, many thanks for joining us on Startup Street today, and wish you the very best.
Thanks, Shruti.
Moving on, it's time for us to head into a short break. Coming up next, electronic waste and battery recycling startup Attero has marked its foray into the D2C space. A special report on its latest offering, Sell Smart, on the other side. Stay tuned. Welcome back to Startup Street. Electronic waste and battery recycling startup Attero has marked its foray into the D2C space with the rollout of an integrated e-waste consumer take-back platform called Sell Smart, which will enable Indians to receive fair market equivalent prices in return of e-waste, along with data security and disposal of e-waste through Attero's recycling processes. Aishwarya Anand is here with this special report. Take a look.
From computers, refrigerators, gadgets, e-bikes and many more, of all the waste that you hand over to the waste picker, India has only been able to recycle 33% of e-waste generated in 2021 to 2022, a whopping 10,70,000 tons, that is nearly 70% of e-waste generated, remains unprocessed, which means it goes directly to landfills. But what if I tell you that now, as a climate-conscious consumer, you can dispose of your e-waste in a responsible and formal manner and even earn money while doing so? Well, that's correct. E-waste recycler Attero has launched a take-it-back platform, CellSmart, which is aimed at recycling old electronic products by scheduling doorstep pickups. So how will this work? Well, let's find out.
As a consumer, I go online, I see the kind of electronic waste that's listed there, whether it's a washing machine, refrigerator, mobile phone, what have you, and show a price. I sort of agree on that price and somebody will come and pick it from my house. Once that electronic waste is picked up, it goes to a regional warehouse where it is aggregated, then goes to a recycling facility and we extract pure gold, pure silver, pure copper, pure aluminum that we put back in the circular economy.
What kind of waste are you collecting on a daily basis from people's home?
We are roughly doing around, let's say 100 orders a day, right? Which on an annual basis translates into 14,000 tons a year. Right, which on a number of units basis translates into 0.4 million units annually. Okay, these 100 orders a day are coming from 10 cities. So by the end of next year, we should be present across all the metro and the tier 1 cities in India. From a count number perspective, it should be around 50 odd cities, right? And our target is that we should end up collecting close to around 1,44,000 tons, or let's say round it off to 1,50,000 tons of electronic waste through CellSmart. Right? That would mean roughly a business of 1,000 crores through CellSmart annually.
What is the kind of monetary benefits that consumers are getting out of it?
Let's say for an air conditioner, it's between 4,000 to 7,000 rupees per air conditioner. For a washing machine, it's between 1,000 to 3,000 rupees per washing machine, and so on and so forth.
How many collection vehicles do you have?
We have partnerships with third-party logistics providers across different cities. I would say total number of dedicated vehicles will be around 25, 30 odd.
When you collect all these vehicles, it's going to your main plant, which is in Roorkee, right?
Yes.
So could you give us a sense of what is the capacity of that plant?
Current capacity for electronic waste recycling, Aishwarya, is 1,50,000 tons, right? Which we are running at full capacity. We are now building more and more plants across the country. In the next 12 months, we'll have multiple plants across each different state in the country. So it need not be shipped all the way to Roorkee, right? Local recycling will happen, and precious metal bearing waste will come to Roorkee for extraction of gold, copper and silver. Capacity will be close to around 4,15,000 tons.
Now that we have understood what CellSmart is doing, let's come to Attero's core business as well, which is your B2B side of it. So what kind of collections are you seeing on that front?
Our partners are every single OEM in the country. Our market share currently is around 30%. We have 46 granted global patents. No other Indian e-waste company apart from Attero has even filed for one. If you look at our collection from a B2B perspective, we collect electronic waste across 1,400 pin codes in the country.
Help me understand what kind of revenues is Attero clocking currently and what is the target that you're setting for next year. And also adding to that, we have understood the India operations. When we talk about global operations, what does that look like?
We are doing roughly around 100 crores a month revenue. So roughly around 1,200 crores annualized revenue. We have been growing around 100% year on year for the last few years. So we expect that growth rate to continue, right? So
Profitably.
We have been generating capital or money for the last 4-5 years.
Yeah.
International expansions, we are building our current lithium and battery recycling capacity, both in India and outside India. Our first plant outside India is coming up in Poland, then the US, and we expect that the battery recycling capacity will translate into 3 lakh tons in the next 4 years, right? 33% of that in India, balance outside India.
Globally, India ranks third in e-waste generation. Between 2010 and 2022, the country witnessed a staggering 163% increase in e-waste generation, according to a report by United Nations Trade and Development. As India's economy grows and tech enhances, tackling e-waste has become a critical environmental issue for the government too, that has enacted e-waste rules, which is aimed at collecting 80% of e-waste from FY24 to 25. Coupled with this, A push towards circular economy from players like Attero can definitely help India tackle its e-waste crisis, which is set to touch 14 million tons by 2030. So, dispose your waste responsibly. With camera person Balbir Singh, Aishwarya Anand for CNBC-TV18.
Well, it's Friday and it is time to take stock of the startup deals. Funding into startups have crossed the $6 billion mark for this year so far. This week saw a total of 16 deals, which was valued at $125 million. One of the biggest deals this week was the fundraise by electric scooter maker Attero. It turned unicorn, and after it raised $71 million from government's NIIF. Some other notable deals include home care product seller Biko, which raised $10 million from Titan Capital, Synergy Capital, and other investors, and e-mobility startup Kazam secured $8 million from Avana Capital, Altera Capital, and slew of other investors. That's not all. Precision oncology player forays secured $6 million, and electric intercity transport player FreshBus raised a little over $5 million. Well, with that, it's the wrap on this edition of Startup Street. More news and updates coming up on the other side.